Doubt and fear doesn't occur at the canvas, it shows in the canvas. It shows the conation of raw earthen material slabbed, stroked and molded at a pace provided by the doubt and fear. Every move weigh in the struggle of one to the other, merging the past to the present, brushstrokes of colors seen but not known. For when the wailing stops, the pieces settle down in abject beauty erected for a century of a century. Speaking, advocating, protesting as the arts are meant to be.
Every major news story is with many perspectives and layered with different levels of impact.
Hello. What time do you...
First, with breaking.
Meet Benga Oreshegun, a fearless voice and an advocate for the truth. He's bringing fresh energy and bold insights to Journalists Hangout.
Get ready for deeper analysis and dynamic perspectives. Join me and Babajide Kolade Otitoju with other veteran journalists on Journalists Hangout. Weekdays from 5 p.m. and on Sundays 1:30 p.m.
All right, glad to have you back. You're still watching Business Nigeria. The managing director of the International Monetary Fund, Kristalina Georgieva, has commended Nigeria's economic reforms under the leadership of President Bola Tinubu in a statement on our X, formerly known as Twitter page on Thursday, released after the meeting with President Tinubu at the G20 summit in Brazil. Georgieva praised Nigeria's decisive measures aimed at fostering economic growth and creating jobs for the citizens, describing her engagement with President Bola Tinubu as excellent. The IMF chief highlighted the progress made by Nigeria in its quest for economic stability. She further assures that the IMF remains strongly committed to supporting Nigeria on its path to recovery and sustained development. Her ex-post reads, let me read it out. Excellent meeting with Nigeria's president and official part at the G20 summit. She commended Nigeria's decisive actions to reform the economy, accelerate growth, and generate jobs for its vibrant population. The IMF strongly supports Nigeria in its journey. That's the end of that post. But let's talk to Mr. Paul Alaje and understand the dynamics in all of this. He is the chief economist with SPM Professionals. He joins us from Ibadan, or your state. Thank you so much, Mr. Alaje. It's good to see you this Friday afternoon.
Thank you so very much.
Yes, before I ask
Thank you so much for having me, sir.
Yes, great stuff. The IMF, again, in a report, I've seen the Economic Outlook report, which we also talked about off camera, for Sub-Saharan Africa, noting that these economic reforms in Nigeria are actually struggling to give meaningful results, even 18 months after the implementation. But one thing I want us to start with is the fact that the IMF agrees to the fact that Nigeria is undergoing reforms. So what do you think?
First of all, I must say that it is good that that meeting happened between IMF chief and President Tinubu, so that having commented last week Friday that the report is not working, and I'm quoting the deputy director of IMF, Ms. Christine Patilo, which made this presentation at the Lagos Business School, that the report that the reform in Nigeria is not working and there is need for us to review. I think a smart move is what the Nigerian authority did by meeting with IMF, perhaps to see where the gray area lies and to see how there can be modification to the policy. So IMF, the organization was worried because countries such as Zambia and Ghana that were in the same economic quagmire seems to have their inflation going down gradually. And if you watch, IMF is especially particularly concerned about countries' inflation, especially Nigerian inflation. IMF thought that the July and August figures that showed inflation had a recess, and that perhaps this will continue to September and October. Unfortunately, we have seen a double increase in the last 2 months, back-to-back increase, I beg your pardon, for September and I think for October. We're waiting early next month to see what November inflation figure will be. And if you look at it very well, IMF on another ground also made submission regarding how countries have not been able to protect their currency, quote and unquote. That's nations that have completely floated their currency because of low reserve have continued to have so much pressure on the entire economy, on inflation, livelihood, and on poverty.
Projected to remain at about 3.19%, and they're saying this seems to be below average. But considering the impact of these reforms, yesterday I spoke around social safety and what can be done to address the fallout. When we say we need to revisit these reforms, where do you think we'll start from? Many would tell you that. Many will tell you that, just allow me, many will say the central bank is doing a lot to try to still defend the Naira one way or the other, but at least try to make that market a bit competitive. So how does this come to you, Mr. Laji?
Well, there is no way we can actually leave the Naira alone. We have to do more with protecting it and also see whether we can shore up our reserve. I think the attention of central bank should be with the Ministry of Trade and Investment as well as Ministry of Finance to ensure that we do everything possible in terms of remittances, the sales of crude, even though it will be withdrawn later, that sales should go first into the central bank covers. It is so very important for us, as this will account for more turnover for us as a nation. So the president, if he needs to intervene, is important, such that even if it's 1 barrel of crude that is sold, that money must first get to the Central Bank of Nigeria or get our vote, our reserve. That is so very important. Every dollar counts now. There is no way we can survive without one way or the other protecting the Naira. So it's a call on Central Bank. I know, Central Bank is doing a lot. I've seen the activity of Central Bank trying to raise the interest rate, but unfortunately, that strategy has not been working, not just because of this central bank. Even the immediate past administration have adopted the same method of raising interest rate, and it got raised so high to a point of 14%, and we thought that was going to be the end. What we have seen now, I've shocked quite a number of economists that central bank can have this sudden increase, and sustain it at this rate. Well, it has implication. We have seen the implication of growth, because raising rate is an anti-growth in the long run, and if it is over-sustained. Two, we have also seen that such policy has implication on employment. Unemployment has moved from 4% to 5.2%, according to the National Bureau of Statistics. It also has implication on investment. So here is it. If we have all of these together, and in spite of what central bank is doing, for me, I want to look at what is the root cause and how do we solve the problem from the root. In solving it from the root, I want to first look at what is the cause of inflation. Not many may say, especially people that have learned economy to some level, they will tell you that inflation is either cost push or demand pull. But is that really very correct? Now, when you look at economics at an advanced level, you know that it goes beyond types of economies. It now has to do with kinds of economies, especially when you are discussing monetary, which of course is the point of conversation here. If you are discussing monetary, you know there are two kinds. There is an inflation caused monetary induced inflation and non-monetary induced inflation. What is monetary induced inflation? What exactly are we referring to? It can also be divided into two. One in which a country has overprinted money in order to have money to spend for public life. And if you check what has happened, the last administration printed nearly $50 billion in Naira. There's no way that those money will disappear all of a sudden. It will certainly induce inflation. So when we printed trillion of Naira, quote and unquote, in the name of ways and means, those are part of the residual inflation we are dealing with. That said, secondly, the new administration felt flotation will help. Flotation, and we are not a net exporting nation. We are not exporting as much as is needed. So we had a lot of backlog of money printed. We have not adopted flotation. One, because government feels that our debt to GDP ratio is so high. Our debt service to revenue is so high, and we need to bring it down from 98%. Now it's around 68%. So I'm going to achieve that. What happens to prices, average price level? It has also surged. So because we have a lot to deal with, and we have to be very careful in dealing with this patient, that we think that we need to operate, but have other underlying ailments. As medical practitioners, we put it. To my mind, it's important we know that some of the strategy, we need to review them. We need to review them to the extent that we put into cognizance reducing inflation, we put into cognizance increasing growth. Check 2024, but government is eyeing over 6%, about 6% GDP growth rate. We are doing around 50% of that. So how do we also combat unemployment? And one of the most important things, which I think should come for stability of exchange rate. This stability we help we help inform general impact on our oil price and so on and so forth. So for me, stability is number one, exchange rate stability, while we look at other macroeconomic variables. And I think that this perhaps is the concern IMF raised, and I'm happy that there is a diplomacy that is going out there between IMF and Nigerian authorities. At the end of the day, what matters is how many more Nigeria can we lift out of poverty? World Bank says about 10 million has been added. How do we move them out? How many more people can we take out of deprivation and hunger? Those are the real macro conversation that I think we should have, and we put our strategy to them. You know, the non-monetary, before I forget, has to do with shortage in supply. For instance, we have shortage in food supply. We have shortage in a number of other supply. How do we improve them? From food, which of course agriculture answer to us, and how do we practice modern farming system in order to reduce this and also change from peasant farming to agro business? Lastly, for non-agro product, how do we ensure that at least power supply is not just available or people just in band A, it is constant and it's quality. Therefore, two things are important: quantity power supply and quality power supply, so that when it comes, it does not damage our factory. And all of this, it has to be also very affordable.
All right, it's interesting, and we see that this administration, the present administration, is trying to move away from ways and means. We see what that has actually, it's not looking pretty good. But debt service was also another area of scrutiny now. Nigeria is ranked among countries with this fiscal burden. How worried are you, Mr. Alaje, also about this? Considering considering our 2025 budget of about 47.9 trillion naira, I guess.
Well, economics, what we recommend as professionals is that your debt service should not be more than 1 over 3. That's 33.3% of your revenue. When you go 34%, then you are beginning to go to the stress level. When you get to 66%, you're already stressed. When you get above 66%, then you are at the breaking point. When you get to the 100%, you are shut down point. So such economy, you have seen what happens to a country like Greece. For Nigeria, we have left the comfort stage, which is 33%. It's accommodatable. We can accommodate it rather. Then we started feeling stress when we get to 34. Now we have almost gotten to a point of shutdown at 98%. Now we are back, but it's still above 66%. And now, again, how do we treat this? Revenue concern, inflationary concern, and so on and so forth. So, are we really burdened? The answer is yes. It's a huge burden on our revenue. Now we are looking at about 47.9 trillion naira GDP. That sounds mongo. That sounds huge. But in the real sense, is it really huge? It's less than $30 billion. If you use today's exchange rate, less than $30 billion. So now we have had nearly $35 billion budget. We have had nearly $40 billion budget. So the budget in the real sense, because Nigeria at the end of the day will be compared with countries like Ghana, will be compared with countries like China, we compare with something like, what do we call it now? Poland, like Russia, and so on and so forth. But the truth is that as we speak, that is not the case. So it's huge budget, but the debt component over 15 trillion, I think, is what we have seen. Unfortunately, this debt component may slightly increase, maybe to 15, maybe to 20, maybe to 21. Well, over the years, this has been the practice. When revenue expectations are not met, we have to go back into debt service, especially when it has to do with recurrent expenditure. And we hope that next year there will be no strike, as the indicators has happened, but government has been able to manage it properly this year, especially for the unions, especially say unions in universities. We really don't know how it may play out next year because, of course, when you look at income, vis-a-vis people's disposable income versus what is happening to their key expenditure, basic expenditure, is no longer at par, no thanks to inflation. So how do we manage this? To my mind, what we need to do right now is to really manage our debt, because more debt, if we collect it, may not really be a solution. What it will mean is that eventually we are going to have fiscal stress, which is what some organizations are saying, and this will now translate to more taxes at the end of the day that people would have to pay. We may come back with tax reform. Check. In the last 5 years, we have had 2 tax reforms under President Buhari, minimum of 2. We are having new set of tax reforms, as beautiful as they appear, but there are new tax reforms, about 4 bills sent to National Assembly already. If you check the back-to-back, the consistency is too high. Why? Because we have had stress in our fiscal life. We have had stress in our revenue line. So we always go back. So when tax increases and people's revenue is not growing at pace with their inflation and the request for more taxes, then it causes concerns. And remember, economics teaches that prices and policies, of course, affect politics.
Mr. Lade, you took me ahead. I was to ask you about those bills and what your submission will be around it. You know, that has really generated comments in recent times from all and sundry. Everyone has a view with regards to this bill, but I think they are reviewing it, and let's see what plays out at the end of the day. But let's wrap up this conversation with the price of petrol. It remains very important for us to touch on that. Mr. Laje, I know me and you, we've on so many occasions discussed about the Dangote refinery, the positives we expected from the launch of that refinery or the inauguration, and it started production. But what's your understanding of this pricing thing as we move on to the end of the year? Let's wrap up on that note.
Well, the pricing of PMA is so central, not just for Nigeria, but for so many countries that are oil producing, and those that are doing it in quantity, at least those that are doing over 1 million barrels a day, and especially member of OPEC +1, in this case, Russia. It is so central, so important to us. If the price goes down and is consistent over time, it may affect our fiscal life. So for Dangote refinery, it's still buying fuel, even though in Naira, but in dollar equivalent. What it means is that will have impact on whatever we pay. If crude prices goes up, we might still have price of PMS at home go up. It's the evidence of a market system that has introduced little subsidy in terms of support for the people, or no subsidy, but shortfalls. So here is it. Prices of crude price will definitely affect a lot of things. To affect how much we buy, it's also going to affect what happens to us. But when you look at the budget of 2025 and what government has sent to the assembly, it's about $75 per barrel. But do I think this should be? We need to look at who is coming up in America as a president. The person coming by January 2025, when this budget hopefully should start, will be Donald Trump. What is Donald Trump known for? One, America first. Now, if it's America first and there are erring countries, what could that mean? It could be a man of peace, and it could be a man that will bring things to pieces. So, in fact, one thing going for Donald Trump is that it's highly unpredictable. He has said wars will stop. We sincerely hope so. If wars stop, then the price of crude is expected to stabilize around the peace around the world. Challenge again is that if we see any major increase in oil supply as a result of new discoveries, then the price will go down. If there are major breakthroughs in terms of technology and the need for PMS, diesel, and so on reduces, then the price again will go down. But if the world is turned around or taken over by wars, we have seen Vladimir Putin's comment about America's decision to support Ukraine with launching ammunition with long range. That has implication on prices. Because if Russia decides to stop supply, definitely price will go up. What does it mean to Nigeria? When price goes up, we're ready to pay more for your gas, be ready to pay more for your PMS, be ready to pay more for diesel. If price goes down, then government of Nigeria will be ready to have less in terms of revenue projection, while Nigerian people may also have less, other things being equal, ceteris paribus mutatis mutandis, that the price of PMS and the price of other products will go down. Most of the time, we hardly feel the impact when such happens.
Olaje, I must thank you so much for your time. Interesting conversation with you. I must say, Chief Economics Partner, SPM Professionals, do enjoy your weekend. We'll see you again soon, sure. Take care.
Thank you so very much for having me.
All right, there. Well, let's move to talk markets now. Is that time where we look at markets review for the week. My colleague Effiong Ekop is already in the studio. Effiong, how's it going? The market is not closing the week on a very good note.
Today it's down again. It was down yesterday. It wraps up the way. It's the negative. It's just about profit taking and markets reviewing its movement, adjusting or readjusting, indices to show the way that monies are getting out of investment portfolios. This is even the season that many people, want to move in to sell their stocks to meet up for December expenditure. So any moment we begin to see some levels of loadment, on those who have large quantities of stocks, yes. So there's nothing wrong with the market. The fundamentals of trading companies, very, very good. We see great attention going to banking, securities, telecom services. The companies that offer, they also take attention from investors. Manufacturing companies that from the beginning of the year, they have been, taking our sympathy.
Yeah, of course. So considering the larger economic situation.
That is it. So if you talk about the financial market, I think they are really, very strong, doing well, taking care of everything. We are expecting that particular sector, I'm talking of the financial market, should be able to satisfy the needs of majority of their shareholders at the end of the closing period, which is next month, when the industry record would have to round up, their transactions and show the registers to the Central Bank of Nigeria and even the markets. So that's what we expect. Everything points to that direction, that some of they will. Many of the big banks, they have even developed this penchant of playing outside the shores of Nigeria. Mm-hmm. Some of them stay in as many as 10, 12, 15 African countries. And so as much as they can, they have to take some kind of advantages or resources or level of profits from those countries back, to their head offices. And that means their books will rise, and you see figures. They have been doing it. Yeah. I have in mind UBA, I have Access, First Bank. A number of them, they are doing very well in many other African countries.
People are already projecting for 2025 now, already putting their money where their mouth is. What are you thinking ahead?
To look 2025, if we go by what the central bank is telling us, we will still look very well to the financial market. That's when we will also see many of them trying to keep up with the recapitalization tendency. And then insurance markets too, they are coming up. So some of them are really weak because of the crisis that have happened in the economy since 2019 when we had the COVID.
Yeah.
Insurance markets, they have come under pressure. Many of even the collapsed buildings that we've had in the hinterland.
Yeah, that's true.
People go to them, to seek succor for, surviving, and so then they flood. So there is still pressure coming from that. Then, pensioners wanting, to stay afloat. Those of them holding annuity with some of them. Yeah. There is pressure. But combining the insurance market with the banks, I think they will appear to be the go-to area that wants to lift the markets, in 2025.
I must thank you so much, Effiong Ekop, for your time as usual. Do enjoy your weekend.
It's my pleasure, Tony.
Well, gold looked set for its largest weekly gains in over 13 months on Friday as escalating geopolitical tensions drove investors to save assets, while the tech rebound led Asian equities higher after worries over VDA's sales growth eased. Now, futures indicated European bourses were set for a muted open, with Eurostock 50 futures up 0.21%, German DAX futures 0.17% higher, FTSE futures climbing 0.535%. In Asia, chipmaker stocks inched after Nvidia touched a record high in U.S. trade on solid earnings, and win shares of